diverse crowd. We have Jake, who's done a number of launches of data centers and energy companies. We have Phil, who's been, across a number of different data centers, but been at EdgeConneX for a while, and then William, who's doing the investing side of both data centers and fiber. So let me pass along, let them introduce themselves, talk a little bit about their companies, and then we're going to go right into some questions. Jake, I'll turn it over to you.
Thank you, Tony. Can everybody hear me okay? Jacob Carnemark. I'm the founder and CEO of Endeavour and Edge. Edge is our data center platform. We work globally today, about 50% in Europe, 50% in the US, and we're expanding to other regions. And then what kind of separates us from some of our peers is on the Endeavour side, we manage and develop our own supply chain. So we invest in core technologies, we scale up differentiated and sustainable tech that we feel improves data center sustainability and reliability. And so we're very active globally right now in the supply chain arena, and hopefully we can offer some thoughts on that.
Cool. Hi, everybody. Phillip Marangella, Chief Marketing and Product Officer at EdgeConneX. I think my CEO is on earlier, Randy Brockman. So again, we're a global data center platform, over 80 data centers around the world, largely build to suit, build to density. We started out the edge, progressed to hyperscale, and certainly, as been the theme today, focused on gigascale data center capacity around the world and supporting the hyperscalers and neoclouds and the like. So.
Hi, Will Smales. I'm Partner and Chief Investment Officer at Morrison. So Morrison just turned 37 years old, so thank you for the applause. But we've been investing in infrastructure for 37 years. So if you go back sort of 15, 20 years ago, what would have the capital been deployed in? It was utilities, airports, ports, toll roads. Fast forward to today, where is the infrastructure capital going? Over 50% of our capital now is in digital infrastructure, probably an incremental 30% in energy, and the rest in all those other asset classes. So I sit on the board of two of our data center platforms, one in Australia, one in the UK, and I'm very focused on how we deploy more capital in the sector.
We have been in a pretty unique time with tariffs, with trade regs. It'd be good to kind of just get the panel's perspective on kind of, both from an operating perspective and an investment perspective. How's that impacted the business? How is that impacting supply chain? Will it continue to, and sort of what have you done to, adhere to the new regs and also change the way you operate? Please, sorry.
So it is a turbulent time. Probably the biggest issue right now is just uncertainty from a standpoint of planning. What you want when you set up new factories and new supply chains is kind of predictability so you can make investments. Where we're seeing issues, we have been building and have factories today set up for US production of, like, for example, our cooling company. And then in Europe, we have separate European production. So we've been somewhat kind of set up nicely for the current piece. But we are working on, in the battery sector, especially as we know most battery infrastructure today is Chinese sourced, or at least a lot of it is. And that's an area where we're working on other sources in Europe and in the US, working heavily on that.
Yeah, just, Tony, I mean, you see it as well. It's certainly a challenge as we've, everybody's been talking about today in this AI epic era, in just a very short amount of time. The scale of power and capacity that we need to build, the short time frames in which we need to build it. We've redesigned the data center, right? We've been blowing cold air on these things for decades, and all of a sudden, every new chip that comes out, there's a step function up in terms of densities that we have to support in the rack. So you still have to do air and support CPU, cloud-based requirements. Now you got GPUs and you're doing liquid and you're looking at immersion. And so you want to, when you talk about supply chain, you also have to think about, you don't want the data center to be obsolete by the time it's built. And so you have to have a flexible data center that can support those different cooling technologies. There isn't standards like we previously had with uptime in terms of liquid. And so every customer is different in terms of their delta T and their flow rate and their filtration, all this kind of stuff. It makes it really hard for us to be able to support those things. And so, and then obviously the equipment and the long lead items and the global supply chain. And so it's challenging. You got to raise the capital. These are tens of $billions of gigawatts, over 10 billion that you have to invest, and you want to make sure you can deliver that on time. So, that's where the experience comes in of dealing with the vendors and the partners and the ecosystem to make sure you can deliver that scale on time. And then, might get into it later, which I think is an often underappreciated component, is the operational considerations that you have to think about now that you're dealing with water in the data center. And you have to completely rewrite your manuals and procedures and what happens when there's a leak and all that kind of stuff. So we can get more into that later. But.
Look, from an investment perspective, investors love certainty. So everything you're talking about scares me. Scares me to bits, right? So how do investors get certainty? Because I tell you, if you look at every investor's Excel model and they're forecasting cash flows against the capital they're deploying to build a data center, and if you chop that off after 15 years, which may be a typical contract that a hyperscaler may be happy to write, and if you chop it off after 15 years at the end of that initial lease term and assume no value after that, you haven't recovered any of your capital in that first period. So you have to take a view that this asset you're building is going to be useful after the first lease term. And in fact, you probably have to assume that there's value in 30 years. And you have to do that against the backdrop of how quickly this industry is taking. So it is actually really quite hard for investors. And remember, an investor is largely agnostic to whether they put $1 into a data center or $1 into a port or $1 into a toll road, right? So I think one of the biggest challenges at the moment is when we think about policy settings, geopolitical overlays, supply chain disruptions, actually, we should be trying whatever we can to give certainty, because then the capital flows. And if we can provide certainty and we can capture more of the capital flows, we'll build more infrastructure and we'll get a competitive advantage.
Just riffing a little bit further off Phillip's and William's point, when you look at what's happening with AI and you just look at the load profile, we're heavily engaged across the hyperscale community on what the load profiles look next, what technology needs to look like. And what a lot of people don't fully realize yet is that AI workload, if you don't mitigate the AI workload at the rack, which everybody's moving away from, it's dropping up and down 70, 80% every 2 to 3 seconds. So when you look at the one line that you need to install to mitigate that from a grid perspective, it's entirely different supply chain. Traditional UPSs don't work. If you actually failed and went on generator, your generators would break. And so to your point about what does a data center look like for the future, it's very, very different than the existing one lines that are out there today. And that necessitates a very, very different supply chain, different equipment. And everybody is kind of right now in a unique space where they're trying to figure out what that looks like. And then to William's point, what is an asset, which we think we've figured out, but what does an asset look like that's going to go from 100 kW racks to 200 to 300, and we have clients talking to us now about 1 megawatt racks, right? That's entirely infrastructure different, in the next 2 years. So the pace of change here is pretty significant. And again, I agree with you. We own our own assets and co-invest in them. We want these things to be valuable for 20, 30 years so we can recoup that, our investment and our investors' investment. So.
I mean, one one school of thought that says, I think we're talking about obsolescence risk, right? We're talking about assets we build that somehow become obsolete because technology moves beyond them. The one thought I have, which would be interested to see whether you agree or not, is because so much capital is going right now into steel and concrete to create these structures with the power and the fiber, that there is an incredible incentive to make these things last a long time because people have invested a huge amount. And if they don't last a long time, we're going to have to build something else, and that's going to cost money, and that's got to get a return. So actually, we may start to see a kind of a wave of innovation around repurposing our assets in a way that allows them to be used for longer. And actually, some of the things you were talking about then, which were news to me in a way, kind of makes me think, actually, there's going to be a group of people here thinking, actually, how do we make these assets go longer?
It's a great point, if I don't mind just jumping in here. So a lot of the data centers that we have today are fairly legacy or antiquated from, if you look at most of the carrier hotels across the US, or across the globe, I should say, they all need some rejuvenation. And so to your point, I think there's going to be, and it's starting, I just sat on a panel a couple weeks ago with a gentleman who runs all the data centers for Geico, the insurance company. And they basically went through a whole, over the last 3 years, a refurbishment of all of their data centers. They just gutted them, rebuilt them, and effectively are now, so the ability to repurpose is going to be quite interesting. And as an infrastructure investor, I imagine you're looking for that long-term investment as opposed to, hey, we're going to put $250 million into an asset that we have to put another 250 in 2 more years. That's obviously not the objective. It's kind of that longevity perspective. But yeah, I think we're going to see that phenomenon. I would say not on the large hyperscale, but it's sort of the mid-market and interconnection data centers. But Phil, this is right up your alley. I mean, this is a lot of what you guys do. Jake, you too.
Well, yeah, I mean, we started out at the edge, and as you're working on as well, include yourself, Tony. And it's funny, those original data centers we built 15 years ago, 2 to 4 megawatts, and now that's a rack, right? In terms of what's coming with Vera Rubin and all that stuff, it's insane. I mean, I think what you'll see is, many of those edge markets that we've built out, and say Tier 2 markets that are kind of quote unquote peering hubs, I think you tether them to a new data center that can support those higher. It just doesn't necessarily make sense to kind of retrofit that to support AI training, inference, especially training, but certainly inference even still. So you just have to kind of hub and spoke that locally with much larger data centers. I think the edge, again, used to be 1 single-digit megawatts, if you will. The new edge, the support inference will be 20, 40. That will also be at scale and so forth, and you just have to kind of tether to those markets. But again, I think you made a great point, William, on kind of certainty, and it's tough, right, for investors that we're talking to support these sorts of things, to have the surety of also the business case. Like, is some of these, especially some of these neoclouds, is it viable in terms of what they're charging per GPU, per hour, and how much they're spending on the chips and the thing and all this kind of stuff? And again, I'm old, right? So I lived in the first, that .com bubble era. I actually worked at Nortel. So I had a firsthand view of that crash and some of the mistakes there. And I think what's different here, and we touched on it, is the customers now are, the Microsofts, the Googles, and so these are sophisticated. It's not a business case, business plan sort of thing. So you can get some confidence from who that is. Certainly the neoclouds, and there's going to be some winners and losers there. But even they are intermingling and supporting the hyperscalers themselves. So I think there's you can get some assurances from the who and those business cases. In terms of the design and so forth, again, let's not forget cloud. There's still a ton of cloud. And so let's say an AI deployment doesn't necessarily work. You can shift back over to cloud and all that kind of stuff. So when we have there's a somewhat confidence in terms of the adaptability and the portability of some of these facilities. And then just everything, there's so much demand in terms of retrofit. I don't necessarily see that. We're not seeing that. It's like everything we're doing is greenfield. Our existing sites are filled at capacity, and those you can retrofit in terms of cloud because that will still exist, but it's all the AI is all kind of greenfield, build a suit, new stuff, and so forth.
It is worth calling out because Bill kicked off the day kind of putting a few warning lights, is this another bubble? I agree, we're not seeing it as investors, but I do want to call out a distinction between, I think the underwriting is really sensible, and there was a comment about Andy and Randy saying that there is not a lot of speculative build. That's true, and then your point on the customer set are amazing. Yeah. And it was interesting. Steve was sitting here saying that some of the big fiber routes he's building are underpinned by those hyperscalers. And I've been saying for years that the reason so much capital can come in to support data centers is thanks to the way the hyperscalers have chosen to contract. Right? If you write a 15-year contract with a AAA counterparty, that's a great day in the office as an investor. And actually, if those contracting structures start to show up in other parts of the digital ecosystem, you'll see the capital start to follow. And it's interesting, Steve sitting here saying, actually, from a Zayo perspective, he's building some of these major routes, but they're underpinned by probably similar type counterparties and contracting structures. The one point is, though, there is still a lot of future value embedded in some of these valuations today. So whilst these businesses have great cash flows, they won't go bust. If people are assuming way too much capacity in the sort of Bragg-Watts concept, there will be adjustment in value. But it won't be a catastrophic effect. It clearly hurts if you're in the investor and you made that poor decision, but it's not fundamental to the stability of the ecosystem.
And I think that's where important where you put those sites, because in terms of where we think to go, sites that can support multiple customers and multiple types of deployment obviously mitigate some of that risk, right? You're not in a very remote area for a single customer that if for whatever reason, they change their mind or whatever, then you're kind of stuck with that strangled asset. And so, some will chase that. That's perfectly fine. But we're trying to be disciplined in terms of where and who we build it for.
I think, we kicked off talking about, some of the challenges we had with government. It would be great to hear sort of, as we start to think through, the panel before, I asked them to talk about sort of what the next 18 months were going to look like, and it's pretty difficult to predict what the next 6 weeks are going to be like because we're changing so fast. But I think as we all start to adapt the new technology and start to think about, you all operate globally, sort of where do you, and Jake, we'll start with you, where do you think we look at sort of technology adoption and adapting to sort of the new regime of how things are, geopolitics, the trade barriers, et cetera, but we also want to have creative thought in terms of where we're going from a technology perspective. How is that impacting the business? How is that, how do you think about that? Because, people play into this, supply chain plays it, and so just kind of give a perspective on that would be super helpful.
Well, I'll kind of answer it, if I were to sum up the question, is where do you think the puck's going? So where I think the puck is going is all of the training that is so heavily being deployed in the U.S. Essentially, the stuff that becomes monetizable, and I'm very hopeful that a lot of it is working. Especially if you look at, we haven't really gotten into the drug industry benefits on AI and advanced research and in medicine. So there's a lot that's coming down the pike. All of that ultimately is going to be attached to eyeballs and businesses. And so inference, which people talk about, it used to be, AI was a little bit overhyped, and everybody's like, actually, it's bigger than the hype. I think if inference, people it's a throwaway term, but I think it's going to move to a real thing that's actually going to be more difficult to do than AI, in the sense that you need to be closer into population densities. You already have tapped out infrastructure there. We're already finding it very hard to find power, and you're going to have just much more, uniform. So I think one is kind of the shift and the balance into inference. The other one I would say is that, and we're involved in a lot of this in Europe, is people and governments really are starting to recognize that AI, not to call it a weapon per se, but it is a strategic asset that countries need to have, and it doesn't look like traditional compute infrastructure where, I'm just going to use XYZ cloud company to service my cloud. I think they're starting to realize that having their own AI infrastructure at a country level is critical. And so we're starting to see a lot of these sovereign AI, initiatives come up and participating in several in Europe. And I think that's going to be a trend globally, is that people don't want to be left out, because the economic kind of and security ramifications of AI are going to be critical for countries. And that's something that I think people think of AI right now and kind of following the general trend of, cloud deployment. I think the shift in inference and the shift of countries feeling that AI is a critical strategic asset, you're going to start seeing a lot more builds in other parts of the world than you are now.
Phil?
I think, for us, for the industry, the biggest challenge and the long pole in tent comes down to power, right? And again, I was also I have a long career, so I mentioned Nortel, and then I was also MCI Verizon, and the smartest folks from MCI Verizon, once we started hitting the cloud era and so forth, where did they go, right? They went to Meta, Facebook back then, and Microsoft and Google. So all the best and brightest from the network side went there. And I think people don't appreciate, when you think who has the most sophisticated network backbones in the world, it's those hyperscalers, right? Because they saw the network as an impediment to the user experience, be it consumer or business or whatever, and they wanted to ensure that they had the submarine cables and the fiber and all the connectivity to ensure that user experience was great. We're in the same realm in terms of power being that kind of impediment to delivering AI capacity, and that's why you see the hyperscalers investing in nuclear plants and doing their, and as are we, right? We're almost thinking of ourselves as a power company first, rather than a data center company, because you have to solve for that first. It then gets to the question is like, well, how do you get the yield on that? Is it separate, the data center from the power? Because those are different metrics. Do you integrate it as one and try to make it work within a 15-year term and all that kind of stuff? And these are some of the challenges, but certainly I think those that are most innovative and dynamic are gonna take it to their own wows to solve for that problem and not wait for the grid or wait for somebody else to solve it. They're going to solve it themselves and deliver an integrated offering, and those will be the winners in terms of AI capacity, because it will drive the speed and the returns and all that kind of stuff. I don't know.
I agree with that, and interesting on the power, there's the sort of the more optimistic view perhaps that you've got, that is that we're just going to be really pragmatic and we'll innovate, behind the meter, in front of the meter. We will cobble together solutions. I think that's probably what we'll do. The reality is, though, we still need an all of the above strategy to get enough power for our needs, and we should be trying to use every form of generation we can lay our hands on. But looking ahead to the next, I don't know, did you say 18 months? I don't know, it's hard to think 18 months. Taking a very financial perspective on all of this, there is a huge challenge getting enough capital into the sector, and then there's an even bigger challenge emerging is how do you get some of that capital back to the investors who asked you to invest it, right? And a lot of this capital has come in private structures. So it's not like a public listing where you can buy and sell every day on the exchange. You know, investors entrust you with this money. They say invest it in a great company like EdgeConneX. But at some point, we would like to see some of that money back. And I think what will happen over the next 12, 18 months is there will be just a lot of innovation coming out of the financial services, well, financial sector. So Wall Street will be coming up with new solutions to find opportunities to help investors recycle capital, reinvest capital. And actually, if you look at Wall Street, you know, let's shout out to Wall Street. Like it will be one of the powerhouses of American innovation to solve the AI challenge, because AI needs data centers, it needs networks, which needs capital, and capital needs innovative solutions to find a home. And I think actually we'll see that being another incredible competitive advantage for the United States, and we'll see more innovation happening around Wall Street in terms of how to get the right capital in the right place at the right time.
Bill, I want to pick up on just something you talked about earlier, which is really when you look at companies all the time, they come across your desk. Phil, when you look at M&A, Jake, you've been involved in building companies. I think we'll start with Bill, but you know, as you start to think about, you know, you look at companies, you evaluate them on whether they're lean and efficient and they can move forward. You know, what is when you go through the process and figure out, hey, I'm going to invest in this company, and Phil, similarly, when you're targeting doing some M&A, and Jake, when you're building a company, you know, you think through the process of, you know, if I'm going to make the investment, if we're going to do the M&A, we're going to start a new company and build. Where do you kind of get the thesis of what the go-forward model is, what the idea, how when you integrate a company in, and Jake, when hey, I write it down on paper and I'm going to start this new company. You've been quite creative in terms of starting new companies. But I think, Bill, if we start with you, is like, hey, you made an investment in, for example, in FiberLight. You know, what is the thesis around how you take that thought process?
So the way we think about it is, firstly, our mantra is we're investing behind the ideas that matter. So and then we're thematic. So we're saying, what are the really big things that are going to move societies over the next decades? And then we think about big thematics like digitization, you know, energy transition, energy security. And then once we're in that thematic, what we're basically saying is this infrastructure? Like, is this an asset that has an enduring social license to operate, will underpin the wealth and well-being of the communities in which it operates? And you can see why then, if you start applying that test, you know, does building out the future of AI infrastructure, is that an idea that matters? Yeah, it does. Is it in a global thematic of digitization? Yes, it is. And do these assets have a long-term reason to exist? And do they improve the prosperity of the countries and the economies in which they're operating? You know, tick, tick, tick. It then comes down to, you know, the age-old saying, you know, is it the horse or a jockey? You know, is it a great business or is it a great management team? And the reality is you absolutely need both. You need great businesses, but you need great leaders, because there's a lot of really tough decisions to be made over this next period. So that's kind of the way we kind of think about it.
I always make the analogy that you can have great players, but if they don't work together well, then you're going to have a tough time. Or you can have a great product with not so great players, or you can have a mediocre product with, you know, a great team. And it's all about functionality of, as you said, of like, how does this all function well together? Right?
Yeah.
Phil, do you want to jump in?
Yeah, I mean, you know, in terms of M&A, I think it starts with our customer first and kind of filling a need, whether it's geographically or product-wise or what have you. If you look at it from a traditional, just pure data center asset perspective, how that calculus is changing, you know, we're backed by EQT, one of the world's largest infrastructure funds. They have a whole portfolio of companies. And so it's almost, how are we leveraging their power infrastructure, their network infrastructure, their other digital infrastructure assets, and then we can make it easy for our customer, right? Rather than having to go to each of those individually, how do we integrate that into an offering that accelerates their time to market and delivery of their services in the locations that they need, right? And so collaborating with our investors, finding those kind of, whether it be a tuck-in or an adjacent technology to be able to bring an integrated offering, that's what's going to kind of drive our kind of solutioning and go-to-market efforts.
On just kind of innovation on the Endeavour side, we're scaling companies and investing heavily in the underlying technology. I would say the two themes that were, they're the guardrails for us that we're working inside of is, one, data centers have to become more and more sustainable. They're just a pure resource efficiency model. The cost is driven by that. So things like in our cooling company, we set out with the objective we were going to go zero water, and we were going to get to PUEs that were as good as the best adiabatic system. We were able to achieve that. Today, we're focused, and we've kind of nailed full heat reuse, in other words, high-grade heat recycling. So we're starting up a lot of projects in Europe right now. And that actually helps to underwrite the cooling system. So when you're doing that and you're actually getting paid for district heating, which you have another revenue piece, it boosts our yields by 200 basis points, which is always nice. And it's good for the community, and we deliver lower cost heat. Another guardrail has been just around delivering a factory model. When you look at the capital intensity of AI at the scale that it's happening now, even for hyperscalers, it's just too capital intensive. The amount of capital slug prior to GPU revenue is too mass, that it's too long and too high, right? So what you need is a factory model, just-in-time delivery. You need to get massively reduced. The other gentleman on the panel earlier talking about 1,200 electricians on site. Back in 2018, when we started Endeavour, we started to heavily invest in what would a collapsed paradigm for the one line look like? How could we get this to where you literally drop your electrical infrastructure, you can scale it up and down from density, which is going to change, but can you get to where you're installing it in weeks? And we're launching something pretty unique on the power side that'll eliminate electrical labor in the field by about 90%. And tri-fuel unit can run prime power, natural gas. So to Philip's point, data centers of the future have to become grid assets. It makes no sense for the grid to be trying to service these gigawatt loads. And as we can see, that just isn't, the infrastructure isn't there. So I think rethinking the way data centers interoperate with the grid and resources is kind of the critical next step. So we really try to focus in on investments and scaling companies that drive between kind of those two themes.
This is great, guys. I want to bring us back to sort of the whole global trade theme. I think what you all offered has been fantastic. So lots is going on with regulatory, with governments. I think there'll be more as we see this heightened use of power. Jake, hearing about kind of where you're going with the elimination of water and going to liquid cooling and alternative cooling is obviously a need. But as you start to think about and plan forward, and Jake, we'll start with you. When we're in this time of exceptional growth, both fiber and just in general in digital infrastructure. We're automating more, we're digitizing more. I mean, we talked on the panel before that, 15 years ago when Uber was introduced, it just, cannibalized a business that, was just general taxis and, the Expedients, the Orbits. I mean, many, many industries are going through this. But as you think about this, I think we'll see this. Other industries are probably going to see it, like the crypto industry is going to see more regulatory. How does the government impact going to change the way we build, the way we think about, the growth, and just adhering to that? I mean, the Europe GDPR, those things, it is impacting kind of how we operate from a business perspective. And you're obviously global. You're outside of the U.S. as well. I'd love to hear sort of thoughts of how you're adhering to sort of the government influence, the government impact. Is that changing, the way you work from a, is it, how can you optimize, how can you take advantage, et cetera?
Yeah, the two things that I would say relative to that are kind of, is in Europe, you see this, and we're a beneficiary of it, is there's a significant pushback on data centers in multiple places in Europe right now. And the pushback to me is well deserved, because they want to see resources used well, right? They don't want big water uses. They don't want just big ugly loads sitting there. They want community benefit. And that's something that we've been very successful at getting data centers going in places, again, with things like heat reuse, using no water, being a grid asset. And so I think more and more from a regulatory perspective, especially in Europe, it's going to be driven by, if these aren't community assets and aren't good for the community, we're going to let you come in. And that's something that we've fortunately been, just from our bent on developing sustainably, been the beneficiary of in Europe. And I think that kind of clampdown is going to continue. In the US, I think it's going to be at a kind of government/utility level with PERC, where these large loads start to create Spain moments in the US, which I believe are upon us shortly here in the next year, where you're going to start to see very, very significant utility issues. And there's going to be kind of a potential overreaction to, hey, listen, what are you doing on your load? What are you mitigating? And starting to push data centers to be behind the meter, especially some of these low loads, because there's just a bunch of data centers being built throughout the US that are going to create significant issues on the grid. And I think that's going to end up becoming a significant theme. But the good news, it can all be resolved through the right tech, and it will get worked out.
Yeah, just to build upon that, I mean, I don't think we as an industry have done very well in terms of telling our story and kind of countering a lot of misinformation in terms of data centers. Oftentimes we'll start touting PUE, and then people just glaze over because they don't know what the hell you're talking about, right? And I think you have to make it relatable. I think we, in terms of, what we often try to do at EdgeConneX is tell the stories around what data centers enable and realize all these applications and all these work, how they benefit, right? Society and industry and in terms of what we do. And also remind folks during COVID, if it wasn't for data centers, right? We wouldn't have been able, kids wouldn't have been able to continue studying, and us working or, just, binging, Netflix or whatever, right? So realize the integral role that they play, all the while, we're being as efficient and dynamic as we can around the resources that we're using in terms of sustainability. I mean, I do feel that some of this stuff comes down to grassroots endeavors in some of these markets and being smart around as a neighbor to some of these folks and kind of listening to them and listening to the concerns and trying to mitigate it rather than just plopping a data center right next to a bunch of houses. Of course you're going to piss people off and you're going to get that pushback. And it becomes an easy foil for people to say, hey, it's the big evil tech companies and they're doing this and doing that and so forth. And so it's very much we as a collective and individually have to start telling the positive impacts of data centers in terms of what we enable and then how we operate and so forth. But I think Peter Hopper talked about it in terms of, be like water, right? If we get a lot of pushback and we have to work with regulators and educate them as well at the federal, state, local level and in terms of, how we're gonna benefit the economy and the communities. But if we get too much pushback in some of these places where there's moratoriums and so forth, you'll move elsewhere. Right, and there's lots of other places that will be more receptive, and then that's what's going to attract the tens of billions of dollars of investment and so forth. And kind of move on from there.
Phil, go to you in 1 second, but I think, Phil, you've touched on something that's really, really interesting. So the community outreach and development, I think, if we think back 10 years ago, if you look at data center companies, you really didn't have an energy group, right? You just had maybe a person who looked at it every once in a while. I think that's probably a next phase is the misconception around, we are trying to help guide the transport of critical data across the globe. And I think, educating people on that is actually quite relevant to what's happening today. Fiber, we're passing these massive data sets to, the healthcare industry is using, really using a lot of the data center space, but content, et cetera, whatever we're creating. And I think that's really, it's actually a great point, especially it's right in your backyard where the biggest data center hub is in the world, right? Yeah,
I live in Ashburn and my neighbors give me crap all the time, right? So I'm like, sorry. You never have a power outage and you have wicked fast internet, so shut up. But in fairness though, there are a lot, right? And I'm like, gosh darn, like they're just coming right in, like they're everywhere, right? And to just being smart about that kind of stuff. But you're seeing tremendous amount of pushback. You're seeing ads pop up, and it's just, we're the boogeyman right now. And so we need to do a better job of telling those positive stories. And again, working with community folks, just not saying, hey, well, we've got the land and the power, tough beans. So it'll be, and again, whether it's sustainability, whether, we're doing a whole bunch of educational initiatives with a lot of like local schools and colleges and so forth. We don't compete on that, right? We're in it together, right? And so I'm working with my colleagues at other data center firms, and we're trying to be inclusive and trying to solve it as a collective rather than individually.
We'll just do a little bit of finessing on your messaging around the super fast broadband and no power outages, but otherwise I think we're on point there.
Yeah.
So just a little bit of that.
You get.
No, I 100% agree that the industry as a whole needs to work better in terms of getting the messaging right. It may have been Phil as well, Peter sitting here, Phil, when you mentioned it, also talking about just working more closely with the utility and, and the generators at the same time, because it requires the three of us to get in the room together to get the solution. And even in one of the regions where we were operating 5 years ago, for the first time we took load off the grid on a really hot, dry, sunny day to allow the utility to get a bit more resilience. So we ran on our generators for a period there, and it was the first time that utility understood the role of working more closely with some of its largest loads. So that was early days, but there's so much more that can be done there.
And I think, all really good points, because I just think there is going to be an education that's going to happen over the next little bit. I think one of the things we talked about in the panel that preceded this was really around partnerships, business partnerships. I think the go forward is going to be, sort of the message will be around community partnerships. Phil, great to hear that you're working, I'm sure you're collaborating with all the bigger folks. And Bill, as the fiber companies say, hey, we're going to tear up your front lawn, I think it's that community development too. We are just about out of time. I want to thank the panelists. This was fantastic. Appreciate everybody coming, and look forward to the next panel. Thank you very much.